Home office deductions. How to properly claim them for maximum savings. Watch this program to understand how home office deductions work and criteria the IRS uses to validate or reject deductions. A must-see if you are an entrepreneur or a small business owner currently working from home, or a remote employee who has a home office agreement with his or her company. Welcome back, folks, to another edition of Sweetie Kiwi. How you doing today? I hope you are doing marvelous. If you're doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. Today I want to talk to you about home office deductions, how to properly claim them for maximum savings. Now, let's define what home office is. Home office deduction, rather. Business owners who regularly operate their businesses in their home can deduct some of their expenses and save money on their taxes, granted they keep careful records and meet the IRS's requirements. You gotta keep those records carefully, folks. There are two methods to claiming home office deductions. There's something called a simplified method. Now, this allows you to write off up to $1,500 annually, and a more in-depth approach for home-based businesses that are large and complex. Today, there are myriad ways to make money working from home, especially in this era of coronavirus, with a lot of organizations starting to look at telecommuting, and a lot of professionals looking into passive income. You have a propensity, you have a growing trend whereby folks are trying to make money from home. So many small business owners operate out of their home, and increasing numbers of workers are opting to freelance full-time, and others choose to take jobs that allow them to work remotely rather than commute into an office every day. So home office deduction, the definition is that you have to keep careful records and you have to meet the IRS's requirement. Now, I'm going to talk very quickly. I'm going to talk soon about the IRS requirement, but make sure you remember that there are two methods. One that is simplified, that allows you to write off up to $1,500 annually, and the second method, which is the more in-depth. There you have to really have records. You have to show to the agency that you are really working from home and the expenses related to your business. Now, let's talk now about the conditions for claiming home office deductions. Before we talk about how to claim home office deductions, let's first talk about what qualifies as home office deduction. When it comes to this tax deduction, the IRS can be pretty strict on who qualifies. So if you don't want to have an audit and you want to get the most out of the home office deduction, let's review what it takes to qualify. There is something called exclusive and regular use. Let me repeat that. Exclusive and regular use. In order to be eligible for a home office deduction, the space you're using, whether it is in your basement, your living room, or in a dedicated office in the house, the space you're using for your office must only be used for your business. This can be the hardest qualifier to meet, and the IRS is very serious about it. Say you use a separate room or multiple rooms in your house as your office for 40 hours of the week. If you only use that part of your house for business, you are in the clear. But if your partner, your spouse, comes into the space to use your desk for a few hours out of that week, your exclusivity eligibility goes out of the door. Remember, exclusive and regular use. Now, the IRS can be very strict when it comes to this eligibility requirement. What they do is using a common rule of thumb. So you will generally meet the exclusivity requirements if personal activities take place in your home office just as much as they would in a regular communal office. That means that if you have the occasional personal phone call in your business home, that's fine. They're not going to be very strict about that. So if you meet the exclusivity requirements, odds are you will meet the regularity home office deduction requirement for your business taxes. There is no specific rule as of the moment to how regularly you use the space, but if you use the space at least a few hours a day, you'll probably be fine. Now, if you're really not in a space that much each week, you probably won't qualify. There are two exceptions though to what we call the exclusivity rule. The first exception is if you run a daycare or elderly care center in your home. For example, let's say as part of your business, you have children in your home from 8 a.m. to 4 p.m. every day, but you make use of the space for personal activities from 4 p.m. on. You can still claim a home office deduction. That's fine. Granted, of course, that you've met your state's licensing requirements, because that's another thing. You need to meet all the other regulatory guidelines here. That's the first exception. The second exception is for business owners who dedicate a portion of their home to store their business's inventory or products. So if you store your products, your materials or inventory or anything in your home office, that's fine. You don't have to be there 24/7. You don't have to be there from 8 a.m. to 4. The products are there, so that's fine already. So that's for exclusive and regular use. You have another doctrine that the IRS looks at to qualify you: principal place of business. So besides exclusive and regular use, you want to make sure that the home office is the principal place of business. That's pretty simple. While your home office doesn't have to be the only place you do business, it does have to be your principal place of business. In other words, the primary place you do business, meaning you build customers there. From there, you perform regular administrative tasks. From there, you keep books in your home office. This could also mean that your home office is where you regularly meet clients and customers. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another edition of Sweetie Kiwi. Now, we've talked about what is a home office deduction. We've talked about, what qualifies as a home office deduction. And now let's talk about how to claim home office deduction. Now, if you love the clarity and quality of the content so far, please consider subscribing to our channel. We really appreciate that. And turn on the notification bell so you can be informed whenever we drop a new show. Really appreciate that. We drop this kind of shows every single day, rain or shine. Comment below, share your experience, and like this content. Now let's talk about the steps to claiming home office deductions. There are two ways to claim home office deductions. So you have the simplified square foot calculation or the actual expense deduction. Now let's talk about the two methods. Number one, first method, the simplified square foot method. Now, this is very simple, as the name implies. All you have to do is to multiply the square footage of your home office by $5. That's it. The catch is that the maximum amount you can write off is, as I said earlier, $1,500. So if you're just starting out or using your office for a side hustle, this might be the right method for you. Again, the $1,500, that's on an annual basis. All right, annual basis. Now, the regular method using Form 8829. So besides the simplified method, you have the actual expense deduction. To do this, you need to use Form 8829. Now, if your home office expenses are more than $1,500 per year, you'll want to use Form 8829. You just got to go to the IRS website, www.irs.gov, and you search for Form 8829. To apply this method, though, you need to calculate the percentages of the various expenses you want to claim. This is likely a better option for more mature or complex home business. Now, the thing here is that part of this process classifies expenses as either direct or indirect. So direct expenses are those that are clearly and definitively tied to the space that you use it as a home office. For example, if let's say you completed some painting projects or renovation that were exclusively done for your home office, you may claim in those cases 100% of direct expenses. Indirect expenses are costs related to the home or property that houses your home office. For example, utilities, mortgage, or rent payments. You may only claim a percentage of indirect expenses, which is the total square footage of your home divided by the square footage of your home office. One limit to the regular method is that you can't claim more on a home office tax deduction than you earn while working in your home office, right? So your claim must be proportional to the time you spend working in your home office. Now, the big question is, and I see a lot of people also already asking us, which is better, the simplified method, the simplified square foot method, or the regular method? Now, it really depends on your business. There are several factors you want to consider before making the final decision here. What is the size of your home office? Let's say your home office is 300 square feet or less. If it is, then the simplified method is likely best. But if you have a bigger office, you could get a larger deduction using the regular method. Now, note that there is no limit to the size of home office using Form A829. There's no limit. Another thing you want to think about is mortgage and rental rates. If you live in an area where the cost of rent or home ownership is very high, you might be able to get a larger deduction using the regular method on Form A829. Home depreciation. Now, for the simplified method, you cannot deduct depreciation. Real estate taxes and the interest on your mortgage can be claimed using Schedule A. If your home has depreciated, you may want to consider using Form 8829. And if you ever sell your home at a profit, this deduction will be taken into consideration in calculating your resulting tax liabilities. Remember that. Another thing you want to think about is record keeping. Let's say record keeping is not really your strong suit. If it's not, then go with the simplified method, because the regular method requires that you keep detailed records of each expense. Even if you don't send the receipts in with your filings, you need to keep them on hand for at least 2 years, just in case you get audited. Now, how much you like filling out forms? If filling out forms is not your forte, then go with the simplified methods, because the simplified methods has only 6 lines on a Schedule C on your 1040. Compare that to the Form 8829, which has 43 lines to complete, right? So simplified method, 6 lines. Regular method on Form A829, you have 43 lines to complete. So when you use Form A829, this must be with your Schedule C when you complete your filing. Now, the best solution for claiming home business deductions is really, if you are not interested in keeping records, is either to have an accountant. So you hire someone who will take care of that part of that activity for you. Can be a tax accountant or CPA or an enrolled agent or a tax attorney, right? So you can add up your home office expenses, and if they're more than $1,500, so you consider using the regular method. If not, use the simplified method, right? And as your business grows and your calculations become more complicated, you can use some programs, some accounting programs, or some accounting apps to streamline your financial processes and record keeping, right? And that's if you don't want to hire someone for that. If not, you can just go with the app, because the better your tools and processes, the more you'll be able to maximize your deductions. All right. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another edition of Sweaty Kiwi. We're also having a conversation here around home office deductions, how to properly claim them for maximum savings. Now, let's talk about home office deductions for employees. Let's say your employer allows you to work from home, or you are a remote worker. You may also claim a home office deduction. But if you're a full-time remote worker, things get a little bit easier to prove, right? Because if you only work a few days a week from home, it's harder to substantiate. But if you are a full-time remote worker, it is easier. The standard for someone who is allowed to work from home part of the time is that the home office is maintained for the convenience of the employer. Now, some experts have said in the past that this might sound a little vague, and the IRS has been a little strict when it comes to substantiating that statement. So essentially, it means that this home office is necessary for the employer's business to function and for the employee to fulfill his or her responsibilities. Let's say, for example, you have a staff member needing to perform his or her duties during off hours when the office is closed. This person will qualify very easily, because documentary evidence is as simple as getting a letter from your employer rather, confirming the need for you to work from home. Note that you won't be able to qualify if you choose to work from home from time to time, because this is more convenient than commuting into the office, right? It also doesn't count if you like to take your work home with you at the end of the day. If you don't qualify, but you regularly use your home office for work, try to get your employer to reimburse you for some of the expenses. Okay, now let's talk about home office deductions. Other points to keep in mind. It is important to understand in all of this conversation how the IRS defines a home office. Now, I've already said that, but I just want to clearly say it again here. The two key concepts are regular and exclusive use. Regular means that you must routinely use this portion of your home for business. Exclusivity means that the area where you work must be identifiable as a space used exclusively for a business. A home office doesn't have to be a room within your home. It can also be a garage. It could be a basement. It could be an outbuilding like a studio or shed, right? Now, let's ask also a few other questions. Once you pick a method, the regular or the simplified method or the regular, are you locked in? No, you're not. You may use either method in a given filing year. If the simplified works better in 1 year, use it. If regular works better the next, it's your call. The only restriction is that you cannot use both methods in the same filing year. It has to be the one or the other. Now, are you going to be audited when you claim a home office deduction? Now, think here is that the IRS has not communicated very well about this in the last few years. Actually, they don't have to communicate, right? Because the risk is likely no larger than for any type of deduction you claim. Now, some research has shown though that there is no conclusive evidence of a greater risk. But if you do a quick search, you see a lot of concerning headlines. So ultimately here, our advice to you is to really be always honest when dealing with the IRS or any other authority in general, or any other person in general. Do your best to be honest, right? Keep good records. Do things to the best of your ability. All right. Now, what if you don't fit the textbook definition of a home office? Let's say on a general level, caregiving is a yes, and parental or hospitality use is a no. Now, if you run licensed home daycare or provider, or you provide some kind of elder care, you may take the home office deduction using either method. On the other hand, any expenses related to any space in your home that you use as a hotel, motel, inn, or similar businesses do not fall under the home office deduction. All right, folks. So this is pretty much it. Let's just quickly recap today's conversation. We were talking about home office deductions, how to properly claim them for maximum savings. I spoke about the home office deduction and I defined it. Conditions for claiming home office deductions. Steps to claiming home office deductions. The best solution for claiming home business deductions. Home office deductions for employees. And home office deductions, other points to keep in mind. Now, before I go, let me give you a quick pro tip. You want to know the rules that apply to you and your industry, because the IRS has a database has a very comprehensive database where they keep information about each industry. So every industry has its own nuances within the tax code, and the traditional office isn't so traditional anymore. So the best thing to do is to learn as much as possible. If you don't know, please look it up. If it's unclear to you, you want to ask a tax advisor. You can go, you want to start by seeing what the IRS has to say in publication 587, business use of your home, including use by daycare providers. The publication is 587. Go on the IRS website, www.irs.gov, and look for publication 587. All right. I will speak to you next time. But until then, remember, stay marvelous.